Bear flags and bull flags. I'm telling you, this has to be one of the most confusing topics for a lot of people out there. And when I say it's confusing, because, well, a lot of people got it wrong. They think that if the market is pointing up like this, that it's bullish, right? They're like, oh, it's moving up in a channel, so it must be bullish. This must be a bear flag or a bull. This must be a bull flag here, right? The market's pushing back up. It's going to start to push back up and make a new high. No, no, no. This, my friends, right here is a bear flag. We got a perfect example of that as well. Maybe I'm confusing. Maybe you can see it here on the chart now, but let's look, right? We got the move down, right? We got that move down here. The trend is what? Moving down. So trend is moving down there. If we go to the bigger time frame, look at the 5-minute chart, you can kind of see it a little bit better. But here's the overall idea. The trend is what? It's moving down. But guess what? All of a sudden, what happens, Patrick? What starts to happen? Well, we start to get a little push back up. Go to the smaller time frames, you can see kind of this push back up here, right? All of a sudden, it's like, oh, the market's starting to push back up. It's got to go higher, right? Like it's going to turn. Well, sure, maybe it does, but maybe it doesn't. If you go here and you draw a little channel to the upside like this, and you think about what a flag looks like, what a bear flag looks like there. This right here, my friends, is textbook bear flag. We got the move down. People start to buy here thinking it's going to push up. Market starts to push back up, gets denied, and then breaks to the downside almost perfectly. So we break through that 20 level, right? We break through that 20 level. What we're always looking for is the bottom of these candles, kind of give us ideas for momentum for the market to move through a level. We break through the 16s and almost 100-point move down. So the bear flag, again, bear flags point up, bull flags point down. I know it's confusing. It doesn't make any sense at all. And it just makes no sense. But you have to really think about it. What is the reason? Why is the market breaking to the downside here through this level? Well, it's probably because people have their stop losses kind of below this channel. They're like, okay, if this can't hold here, 20,000 tens, I'm getting out. So you're adding more pressure. You've got more shorts looking for the break below 20,000s. It all makes sense, right? That if this line right here breaks, if this line on the bottom, people who are buying, they're going to get out. They're going to get out of this move because at this point when we break, they think momentum is now going to go lower. So the smart money starts to get out. There's more sellers. There's more sellers. The market is moving down, down, down. And guess where it's moving to? Pivot point down there at the 920s. Look what's happening right now. Again, another bear flag. This is actually a perfect bear flag here. Let's see if it'll play out perfectly. But as this starts to move down, you're basically drawing your little flag there. If we lose that 60 support, well, what would happen? We would then start to sell down, and look at that. Starting to break through 60s here. You're basically looking for that 60 area to break and then get this momentum to move the market down to this pivot point there next. You got your stops up there above the high of this candle, right? Momentum is coming in. We're trying to get this sell through. They sell through the 60s here. You got this little low right there at 35 to get through. But I like the fact that that little low candle is there. So I can really kind of target into this sell basically through here, 35s, the 30s right there, the 20s, the pivot point. We know it's starting to curl over, roll off here, right? The wave is playing out. The wave, remember there's a wave. The market moves in waves. So now with this flag, basically looking for that continuation through the 60s there and to move down there to the 20s. These patterns are constantly repeating themselves. The bear flags, the bull flags, you're going to get these patterns over and over. So you're going to really start to see this the more that you trade and the longer that you trade. If you go over here and you start to look for what is a bull flag, for example. What's a bull flag? Well, your bull flag is going to basically be momentum again. Momentum is now starting to push up here. Momentum is pushing up. We've started to turn the corner. We're starting to push back up here. Momentum's coming in, starting to push. Well, what needs to happen? We need a little bit of a retracement. We're going to build out a bull flag here, right? Bull flag at your pull, the pop, the drop. But again, remember, very simple. What is the trend doing here? What is the trend doing? The trend is pointing up. The trend is pointing up. What is the bull flag doing? The bull flag is pointing down. The bull flag is pointing down. I feel like that's like a kid's song or something. Song for kids. But the bull flag is pointing down. We're finding support here at the 80s, and then we're getting that big breakout to the upside. So, big difference, right? Bull flags, bear flags. Basically, the way to really think about it is when you're looking at the trend, is that flag going against the trend or is it going with the trend? If that makes sense. Kind of tricky to say it that way, but the more you go back and look, you'll see these flags repeating and repeating and repeating. Same thing here. Market starts to turn back up. Remember, we got our bear flags over here. Big bear flag, another bear flag. Those little channels pointing back up. The trend pointing down. The market continues to move down. We keep losing that support. The market then starts to find some support. We start to push back up. We're making these little higher lows. The bulls are coming in here. Where are you looking at? Well, look. Again, you got your little bull flag, your pullback, the breakout there. So it's just like the opposite, right? The bear flags are pointing up here, while the market's moving down. The bull flags are pointing down while the market moves up. If you think about it, it's almost like this, right? Like the wave, right? That's how it looks when it's going up. So the pullbacks are obviously, when it's bullish, are going to be pointing down because, again, momentum is pointing down on those pullbacks. And then when the market starts to push back up, the market momentum is pushing up. Remember, the market moves in waves, right? Always waves. Always bull flags, always bear flags. And again, what happens when the market's moving down? The momentum is starting to push back up, but then bam, goes down. Momentum is down. The little pushes back up, the pullbacks, momentum continues down. The market continues to go lower. And just to go back here to that previous bear flag, you can see a little bit of a pushback up off the 50s. The idea here still is that this would want to push to the downside. The high on that candle right there was 73. The high there, 73, trying to get stuck. This might want to push back up. I always try to look at bigger time frames, think about where this would push back up. When there's a bigger time frame, bear flag or bull flag, when you have those bigger time frame flags or patterns playing out, those are going to be much more reliable, right? You got to be careful. Those 1 minute time frames, sometimes it's just a little too much noise. You end up getting stopped out. The market moves in your favor. So the best thing to do really is focus on, a little bit bigger time frames, see what the overall trend is doing here. There's a good chance now that this kind of pushes back up there, where that VWAP is, retest the VWAP, and then starts to move back down. As long as it stays below the VWAP, you can see momentum is to the downside, obviously. So there's two ways to kind of really play it. You play it with the idea of the bigger time frame always being king, and then kind of looking for your entries on the smaller time frame, or you just go all in all the time. Don't do that, whatever you do. But you can see we're still getting denied there. The bear flag is still playing out. There's a very, very high chance. Remember, we don't know exactly where the market's going to go. We don't know if it's going to go up. We don't know if it's going to go down. It's just, we don't know for sure. Every time you enter a trade, you're entering a trade based on the idea that you have a statistical edge, an edge in this market. And right now we're seeing if we have this edge, as there's a higher chance, it's a 50-50 chance, right? The market either goes up or down. But with this pattern that we've seen over and over and over, with this pattern, there's a chance that this starts to move down. So we need to be patient. Follow the trend, trade the trend. The market's pointing down. bear flag's pointing up, it all just plays out.